Welcome to the Capital Spreads Weekly Update. Today is Wednesday the 14th of September 2011 and it's been again a very volatile week, continued concerns over the European sovereign debt crisis. We even had an announcement from Italy that they will be supported by China, something that we've seen before. Of course, China have been one of the biggest buyers of euros and European sovereign debt, and that was an attempt to try and temper the mood within the marketplace. It didn't really succeed. We've seen continued volatility. Today the FTSE is around 5,200, the Dow 11,030, just above the 11,000 level. The euro has really been hit quite hard and it continues to struggle, but around recent lows 136.50. And for cable, again below the 1.6 at 157.70. Gold has pretty much traded sideways in the last week or so. It's at 18.28, and for Brent things have come off a little bit as well at 112. So it is continuing the theme of the European sovereign debt crisis. Today, later on today, we have Merkozy, as they're referred to now, so Nicolas Sarkozy and Angela Merkel talking to the Greek Prime Minister about their next tranche of their bailout, whether they will get that and whether their austerity plans are going according to schedule. And so that is the focus of the day. In the FTSE, resistance hasn't really changed, 53.50, 75, and then of course crucially 5,400, and the same for support. We have really pretty much gone sideways over the last week, 50.50 and then 49.60 before 4,800 is the big support area. How have clients been trading at the moment? Well, they have on the whole been long the FTSE, but the conditions have been very difficult, so often positions have changed quite regularly. As regards currencies, they are opposing the weakness in cable, so they're long sterling dollar, and interestingly on the whole they are short the euro, so clients feeling pretty bearish towards the euro feel that that's got further weakness in it. As regards gold, even though gold has tested 1,800, clients on the whole still remain bullish. So for the rest of this week, plenty to focus on. We've got US retail sales later today, followed by UK retail sales. Now, US retail sales are expected to just increase a little bit. A positive beige book might assist with that, whereas UK retail sales are expected to go down, and that coincides with relatively weak survey data from the CBI and the BRC, so we should see weakness through August in the UK. Then on Friday we get University of Michigan confidence from the US, but most importantly Friday, the highlight of that day will be a meeting of the EU ministers. Once again they meeting to try and resolve the situation, but the special thing about this meeting is that they're going to be joined by the US Treasury Secretary Timothy Geithner, and that is quite a crucial step because it means that obviously there's going to be US influence at the table at that meeting, and already the US and China are putting the pressure on European leaders to really resolve this situ, which has been dominating the markets in the last few weeks, well, and years as well. So what's the theme of this week? Well, where could markets possibly head from here? We've pretty much gone sideways in the FTSE for the last couple of weeks, whereas European indices, in particular the CAC, has plummeted to new lows. So what can we expect for the FTSE? Often you'll find sell-offs happen in a three-wave pattern. So this chart of the FTSE, you can see that we've had wave 1 and wave 2, the small recovery. Can we expect wave 3, which could potentially take us to test 4,800, maybe possibly below? Now when you compare that to the CAC, the French index obviously has had wave 1 and wave 2, but also has seen a third wave to the downside. It has taken out its recent lows. And so the question is, and this is where the turmoil is, of course, is that third wave now complete? Have we got the bad sentiment and all the bad news out of the way now? Have markets finally priced in the bad news? So from these levels, will we go higher? It's difficult to see, but of course we'll be keeping an eye on these charts very closely. And as ever, that's it for this week. Do give us feedback, media@capitalspreads.com.